If you're keeping over this amount in your bank account, you could be making a huge mistake. I know so many people having 50,000, 80,000, even more just sitting in their checking account, and they genuinely think that they are doing great financially. And I get that. It feels safe. It feels responsible. You log in and you see that big number and it gives you peace of mind. But here's the truth. If you are stacking too much cash in your bank account, it is actually working against you, and it is costing you money every single day. According to recent data, the average savings account is paying less than 0.5% interest, while inflation is running at 3%. That means that your money is losing value just sitting there. And countless studies show that people with large cash balances miss out on thousands of dollars of potential returns every single year. Because the truth is that cash management is the most rarely talked about skills in personal finance, but it is absolutely critical. And so in today's video, I'm going to show you why keeping too much money in that bank account could be one of the costliest mistakes that you are making with your money. And by the end of this video, you're going to know exactly the dollar amount that you need to keep in your bank account and what to do with everything else. And so if you are ready, do me a huge favor, drop a money bag emoji down in that comment section so that I'll know you're with me. And let's dive in. What's up, everybody? I'm Rashida, and I help people to make smart money moves. I began my wealth building journey at 17 years old, and I've grown that portfolio to 7 figures, all on a police officer's salary. So I'm on a mission to show you how to get there too. So let's go. All right, now let's have some real talk for just a second, because that big bank account that you are so proud of, it is quietly draining your wealth. And I know that sounds backwards, but stick with me. I'm going to break down exactly what is happening and what you need to do about it. Today, we are going to get into the exact dollar amount that you need to have in your bank account and why it is probably a lot less than you have in there right now. We're going to look at the 3 hidden ways that your cash is losing value, even though that number stays the same. And we're going to take a look at what smart investors actually do with their cash so that it continues to grow instead of shrink. But let me tell you about one of my best friends, Amanda, all right, because her story is going to sound very familiar. Now, Amanda came to me feeling great about her finances. She had managed to save over $80,000, and she kept all of that money in her savings account. She was proud of it, and she should be, all right? She felt like she was finally getting ahead with her finances. But when I sat down with her and we looked at her numbers together, everything changed, because I was able to show her that over the past 3 years, inflation had done a tremendous job of eating away at her purchasing power. And this concept is one of the most overlooked in personal finances, and people love to ignore this because that $80,000 could now only buy $73,000 worth of goods and services today. Then I went on to show her what would have happened if she had put that money in even just a basic high yield savings account. She would have earned around $9,000 in interest over those same 3 years. And so that is a $16,000 swing just by making one simple change. Amanda looked at me and she said, I thought that I was being smart about my money. I didn't realize that I was actually losing it. And that is when it clicked for her. So let's get into the big question. How much should you actually keep in your bank account? Now, here's a guideline that most financial experts are going to recommend is to keep 3 to 6 months of living expenses inside of an emergency fund, because this is your safety net. And let me show you what I mean. And so if your living expenses are around $4,000 a month, so that includes just your necessities like rent, insurance, groceries, utilities. And so if you add all of those necessities up and it's around $4,000, you want to make sure you've got between $12,000 and $24,000 set aside in a high yield savings account. Now, if you're someone that still does not have a high yield savings account open, you got to get on that, all right? I left links down in the description so that you can take a look at some of my favorites. Now, outside of that, you want to have your checking account, but you only want to keep 1 month of expenses plus a small buffer for any unexpected things. And so you may be talking a total of $5,000 in that checking. And every everything beyond that $5,000 should be working for you somewhere else. And I know what some of y'all are thinking. You're thinking, but Rashida, what if I need money quickly? What if there's an emergency? What if opportunities come up? And those are all valid concerns, and I'm going to address those. But here's the thing, that fear of what if it is costing you real money every single day. When you are keeping too much cash in your bank account, you are paying 3 hidden costs that most people never think about. Now, the first and most devastating cost of keeping too much cash in a bank account is inflation. Because right now, inflation is running right around 3% annually. Now, I know it may not sound like much, but it means that every year your money buys 3% less than it did the year before. And this can become a huge problem long term. And let me show you what this looks like over time. If you have $30,000 in your account today, next year it will still say $30,000, but it will only have the buying power of $29,100. Now that's only $900, and so you're probably not tripping too hard. But after 5 years, that $30,000 is only going to buy you $25,300 worth of things in the real world. And so you just lost over $4,700 in purchasing power without spending a single dollar. And if that sounds like a lot, let's look at 10 years. Your $30,000 now has the buying power of just $19,700. So you lost over $10,300 in real terms. Think about that. In 10 years, your money will lose 1/3 of its value from just sitting in a standard checking or savings account. And so while that number in your account stays the same, what you can actually go out and buy with it keeps shrinking. The inflation monster is an invisible tax that hits everyone who keeps too much cash sitting idle. All right, now the second cost to keeping too much cash in that bank account is opportunity cost. Because while your money is sitting there earning basically nothing, you are missing out on real growth. Now, historically, the stock market has actually returned an average of about 10% per year over the long term. And even your more conservative options like a high yield savings account is going to earn you anywhere from 3 to 4.5% right now. And so now let me show you what happens to that same $30,000 over time. Now your savings sitting at a traditional bank like a Wells Fargo, a Bank of America, a Chase Bank, you're getting about 0.1% APY every year. All right. Now after 5 years, that $30,000 is going to grow to $30,015. And after 10 years, $30,030. All right. So you earned $30 on your money over a 10-year period. Now, if you have your $30,000 parked in a high yield savings account earning 4%, after 5 years, your money has grown to $36,500. And over 10 years, that 30 grand has grown to $44,470. Now let's take it one step further. If you were to invest that same $30,000 into an S&P 500 index fund, that has returned an average of 10% per year. After 5 years, your $30,000 has grown to over $48,000. And after 10 years of putting that $30,000 to work and never adding another dime, your money has swelled to over $77,000. And this return is actually adjusted for inflation because the real return is actually 12% if you look at the past 10 years. And so let that sink in. And the difference between that traditional savings versus investing for growth, that is nearly a $48,000 difference. Guys, that is not small money. That is a down payment on a house. That is someone's salary for a year. Now, the third cost of keeping too much money in that bank account is the spending effect. Now, this one even surprised me when I first learned about it, but there is so much research on this. People who keep large amounts of cash in their accounts tend to spend a lot more freely, because if you've got $50,000 sitting in that account, that $200 dinner out, spending an extra $1,000 at Christmas, it feels insignificant. It feels non-consequential. And so over time, you're becoming less mindful about your spending. And I know this seems counterintuitive, but having too much cash accessible can actually hurt your financial discipline. And that is a fact. Now, those are the 3 ways that you're losing money, but there's a part that really bothered me when I figured it out, because your bank isn't just sitting around while this is happening. They are actually profiting from this. Now, before we dive into that, please do me a huge favor, look down, see if you have subscribed to the channel, and if you haven't, please consider doing so. I come here every single week to help you guys better understand the world of money and how you can turn your income into real wealth, so do me that favor. Now, most people don't realize this, but your bank loves when you keep a large balance with them. And why is that? It's because they take your deposits and they use that money to make new loans and to invest that money and earn themselves 6, 8, sometimes 10% returns. And what are they paying you? Usually close to nothing, or maybe 0.01% if you're lucky. And so you are essentially letting the bank use your hard-earned money to make a profit while they give you nearly nothing in return. And once you can understand this concept, it changes how you think about where you keep your cash. So why do so many smart people make this mistake? Like so many things, it comes down to psychology. It's because cash feels safe. You can see the exact number in your account. There is no volatility. There's no ups and downs. There's no risk of losing value, or at least that's what it feels like. But that sense of safety is actually an illusion. And if you don't take anything else away from this video, I need you to understand that. While you're trying to protect yourself from short-term market fluctuations, you are guaranteeing long-term losses to inflation. And I call this the cash comfort trap, because the more cash you accumulate, the safer you tend to feel. But ironically, the less wealth you are actually building. You see, wealthy people think about cash a lot differently. They see cash as a tool and not as a goal. They are keeping just enough in cash for emergencies and any short-term needs, but everything else they are putting to work immediately in investments that grow over time. Warren Buffett put this perfectly. If you don't know who that is, he is the most successful investor in history. He says that cash is like oxygen. You never think about it when you have enough, but it is all you think about when you don't. And so the key is having enough, not too little, and definitely not too much. Okay, so I know you're asking, if you shouldn't keep all of your money in a regular bank account, where should it go? Here is the simple system that I recommend. Level 1 is going to be that high yield savings account. This is where your emergency fund is going to live. You're going to be earning anywhere from 3 to 4% interest instead of basically zero. So you are at least combating inflation with your emergency fund being in this account. These accounts are completely safe. They are FDIC insured and they're accessible within a day or two. But now that money is actually working for you. Level 2 is going to be treasury bills. Now this is for money that you don't anticipate needing for the next 6 to 12 months. These are actually even safer than a regular savings account, and they typically offer slightly better returns. Now, if you want to learn more about treasury bills or T-bills, I'll leave a link to a video that I've done on those in the past in the show notes. Now, level 3 is conservative investments. This is for money that you won't anticipate needing for the next 2 to 3 years. So consider bond funds or balanced mutual funds for this money. Now, these are definitely going to have a bit more risk associated with them, but you're also going to have the potential for better returns. Now, level 4 is going to be those growth investments. This is for money that you don't anticipate needing for 5 years or more. This money should be invested for real growth, because this is where you are going to build real wealth. It's going to be through index funds, through diversified stock portfolios, or in some cases, real estate, because these assets have a history of appreciating far beyond the level of inflation. And so the key thing here is to make sure you're matching your timeline to the investment type. All right, now here is what I want you to consider working on this week. Seriously, you can pause the video right now and start to work through these steps. Step 1, if you haven't already done it, is to go ahead and calculate that emergency fund number for yourself. So add up all of your monthly expenses. So the rent, the mortgage, utilities, insurance, car payment, everything. We're not talking about random things like DoorDash, eating out, dining out, subscriptions, things like that. We're talking about the absolute bare essentials. Now multiply that number by 3 to 6, and this is going to depend on your situation, okay? If you know that you have pretty stable employment, 3 months might be enough. Now, if your income is variable, meaning you work on commission, or you work in a high risk environment like a tech company, or you run your own business, aim to have 6 months of living expenses tucked away. Now, step 2 is to check your current cash. Go ahead and log into all of your bank accounts right now and add up everything that you have in checking and savings. And if you got it at random different banks, add all of those accounts together. Now, step 3 is to go ahead and determine what your excess cash amount is. Subtract your emergency fund from your total cash. And the difference between those two numbers is going to be the money that should be working harder for you. Step number 4 is going to be to go ahead and open your high yield savings account if you haven't done that already. It takes less than 10 minutes to open these accounts online. There are plenty of reputable options out there that are paying anywhere from 3 to 4% right now on average. Take advantage of that. Again, check the link down in the description. Then you want to move your emergency fund to whatever high yield account you decide to go with. Your money is going to sit in this account and earn passive income week after week, month after month, year after year. Now, step number 5 is my favorite, and that is going to be invest the rest, but strategically, okay? So based on when you actually need the money, move it into the appropriate level from the system that I just showed you. And so don't overthink this. If you're nervous, just start with levels 1 and 2, because you can always adjust later as you get more comfortable. Look, here's the bottom line. Your money has 2 jobs, is to protect you from emergencies and to grow your wealth. And so when you keep too much cash sitting idle, you are failing at both. Now, the steps that I showed you today, they are not complicated. Emergency fund in the high yield savings, 1 month in checking, everything else invested based on your timeline. That's it. Now, 5 years from now, you are going to look back at today. Now, the only question is, will you wish that you had started, or will you be glad that you did? Because the truth is that your future wealth, it is built on the decisions that you make right now, not tomorrow, not next month, today. So what's it going to be? Now, if you found this video helpful, do me a huge favor. Please share it with 3 friends who you know need to hear this message. And if you are still here at this point in the video, you are my people. Drop a fire emoji down in the comment section. Thank you guys so much for being here. I will see you next week. Again, I'm Rashida, and I'm out.